Hey,
All right. Hi, guys. It's Owners here from Window Property Group Buyers Agency. And we have a special guest with us today, Robin Carter from Love Homes Conveyancing.
hi
And
everyone.
we just wanted to talk to you guys about how to avoid pitfalls when purchasing property. We have Robin here. He's got about 15 years experience in the property game. He's the owner and operator of Love Homes Conveyancing. He's an active solicitor in Queensland and New South Wales. So, Robin, I'll get you to further introduce yourself and say hi to our audience, and we'll get started.
Absolutely, thank you, owners. So yeah, as owners said, my name's Robin. I am a solicitor here in New South Wales, and I run Love Homes Conveyancing, which we focus exclusively in property matters. So yeah, started in Sydney, and yeah, basically do all properties in New South Wales, and yeah, we do property purchases in Queensland as well.
Yeah, awesome, awesome. All right, guys. So the topic of discussion today is how to avoid pitfalls when purchasing property. We will have a Q&A, so we'll leave that to the end of the session. So first topic of discussion that we want to introduce is essentially, Robin, I'll get your points here. Just the basics of a New South Wales contract and what people should be looking out for. So, perfect scenario is okay, you found a home and you've done everything beforehand. So, you are pre approved from your bank and you found a property, whether it be for investment purposes or owner occupied purposes. What should people really be looking out for within a standard New South Wales contract?
Yeah, absolutely. And I think the first point to make is a lot of people don't really know when they need to engage their solicitor conveyancer in the process. So that's something we hear a little bit. So just
Yep.
knowing exactly when and what that bit of the process is. So yeah, pre-approval. And at that stage where they're like looking to make an offer on a property is the ideal time to engage their solicitor. So what we do is we will review the contract. So typically, yeah, I mean, all contracts are based on an REIQ law, New South Wales Law Society
Yep.
um, template. So they're all there's a section which is all standard terms and conditions, and then you have the special conditions, and then you have all the attachments as well. So what we do as solicitors, conveyancers, is actually explain some of those common terms and conditions, and then we check all the special conditions and just make sure that whatever that particular vendor is wanting is it's going to align with our purchasers' expectations as well. And then we'll do things like we check the title, we check the plan, we will explain like if there's things like easements or any restrictions on the title which might affect people's um, future plans if they're buying a house or if they're buying an apartment, they just get to understand, like what's their unit entitlement, which is like their sort of share of ownership of the whole scheme.
Okay. Awesome. 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 So I guess in short, using a solicitor, you'd confirm and make sure that the contracts are intact. Is there anything that can nullify a contract, a standard New South Wales contract of sale? So anything that's not included within a contract?
Look, there are some uh, provisions which enable people to maybe terminate the contract, but I think that I guess the two biggest points and potential pitfalls when people sign a contract of sale is that people should really need to be aware of is one, there's this concept of buyer beware, or the Latin was caveat emptor, and it's really all about it's totally the buyer's responsibility to understand what they're buying. So the vendor, although they have to put the contract together and there's documents attached to the contract, which they do call disclosures, really
Yeah.
like understanding the quality of the property, the quality of the property and what they're buying is totally the purchaser's responsibility. The vendor doesn't have to tell them anything about the property or the quality of the property. So like the inspection is really important. And I think we're going to come to those points soon. So one is this concept of buyer beware. And so from that perspective, you need to understand the contract and what you're buying, because once you've signed that contract, it really is, it's quite difficult to get out of. There are, I've said, a few areas where that can happen, but they're very limited, and generally it wouldn't apply to most people. So if you then subsequently discover, something's wrong with the property, or you don't like it, or something else, even from once you've signed, it's very difficult to get out of a contract unless you meet those actual legal reasons.
And another common thing that I see with New South Wales contracts is a Section 10.7. So if you could share a bit about that and what that involves.
So in all contracts, they have what's called a planning certificate, which comes from council. So the legal jargon is a Section 10.7 certificate because it comes from the Environmental Planning Act. But basically, it comes from council and says, okay, the property that you're buying, like, what's the zoning? So is it like, R1 residential? Is it B3 mixed use? And that will really, it basically governs what the council will allow in that area. So obviously, if you're buying an apartment, you're going to be in like a medium density to high density zone. If you're buying just a standard brick house and everything else around it is brick housing, you're probably in like a low density area. And really, I think it probably applies, it's something that really applies probably more to houses than apartments. But if you're looking at buying a house, and maybe you're thinking like future development or renovation or upgrading or dividing or granny flats, the planning certificate or Section 10.7 is really important from that perspective to understand what you can and can't do, and also if there are any restrictions applicable to the land from a zoning perspective. So that could be things like, is it in a flood area? Is it a bushfire risk? Is it in an area where there's potential contaminated land? So obviously, those are things which can come back and either affect your insurance, affect your ability to develop the land, which might be put into or heritage areas, for example. So ability to put a second story on the property, or extend out the back, or put an attic in. So understanding that can be quite important. As I said, sort of more important for houses, less important for apartments.
And I like that point, Robin. The point that you brought up before regarding caveat emptor, just saying that buyer beware, and that whatever you are purchasing, there's really not going to be any kind of additions or omissions to it. What you see is what you get, essentially. So it's really your responsibility to negotiate that property and make sure that it's something that you're happy to actually purchase. So that brings us into negotiating contracts and evaluating purchase price. So the way we do it at Window Property Group is we like to compare property prices against others within the same area, of course, and the same types of properties also. So the way we do that, we do use platforms that help us do them more effectively. But for those that don't have these platforms, such as CoreLogic, Price Finder, Suburb Finder, really what you can do is just jump on realestate.com and just compare what you're looking to purchase against those that have sold within the past 12 months. And then just go through them all, and you will find that the data may be a bit skewed. Reason why it can potentially be skewed is because one, the vendor may have sold that property due to personal circumstances, for example, a death in their family, which may seem very cheap to the prospective property you're looking at purchasing. There could have been a divorce, or the banks could have repossessed that property also. So it's really good to just do a quick search and see what comparables are out there in the market, and then that would help you substantiate your purchase price. And I guess you can also look at data such as CoreLogic. They do have a free version too. You can look at the property that you're looking at purchasing, compare your purchase price to the median price. I know a lot of other investors like to use this method to ensure that they're purchasing below market value. But then in this recent market and I guess COVID, the data doesn't really keep up with what's being sold. So what seems to be market value can quickly and easily be something that's not at market value. So for example, let's say in a market like Queensland where it was really hot recently, in terms of buyer activity and interest, a property could have been selling for 500,000. And what you'd see in terms of data on realestate.com is that the median house prices there are around 420 to 450,000, but that median price has moved quicker than what the data has suggested. So that can be a massive deterrent in terms of you making that purchase. And then I guess what happens as well is that that market has kind of stabilized, and the new entry point for that market has been 500,000. So you may have been hanging around and saying that, look, you want to wait until prices fall. Prices haven't fallen in that certain market, and therefore you've kind of missed out in that area, and therefore you're going to need to look at neighboring suburbs. So that's just a few typical examples, but also, I guess in terms of buyer beware and caveat emptor, what you see is what you get when purchasing a property. You do have the cooling off period, which is typically 5 days in New South Wales and 5 days in Queensland. So I'll let Robin kind of elaborate on that. And I do believe that there are termination fees, if you will, if you do not proceed. So Robin, what have you seen in that space, and why have people, I guess, rescinded from contracts?
Yeah, I think also what's really good now is with the market changing, it's really good to understand, especially from a purchaser perspective, and I guess even from a vendor perspective, you know, how this cooling off period is going to work. So when the market's hot and prices are going up and there's more buyers, more buyers than sellers, so more competition for properties, like we'll have more auctions, and people would have seen, like, you know, auction clearing rates are higher. And in that situation, and if you buy at auction, there is no cooling off. So let's just mention that. So it's only when you're offering on a property that's like either before auction, or it's not going to auction, or it's been passed in an auction. So you're offering it and it's not going through the auction process. So then you've got the opportunity to have a cooling off period. So in a hot market where there's multiple purchases, the agent will probably say, hey, we want to give you what's called a Section 66W certificate. And that's something that the solicitor provides, the conveyancer provides, which says the purchaser agrees we're not going to have a cooling off period. So it just means that your offer, once you sign the contract, you're in it. You have to go through the settlement. But now the market's changed a bit, and obviously there's more, probably more sellers than buyers, or the buyer interest is lower. Obviously the buyers then have a little bit more power. So cooling off is really great, especially like for first home buyers, because they often need that security of having 5 days or more just to get their formal finance in place. So cooling off is great. Like if you've got a pre-approval and you want to have that certainty that you're going to get formal loan approval. So cooling off is great for that. Also, if you're in a position where you maybe want to secure the property, but you want to do more due diligence, like get a strata report if it's an apartment, or get a building and pest inspection done if it's a house, the cooling off period is really great for doing your due diligence on the property. So in New South Wales, but to enter into the contract, you have to pay a deposit, and in a way, so you have to pay with the cooling off period 0.25% of the purchase price. So basically, for every $1 million, that's $2,500, and you've just got to think of it is that's the cost of the vendor holding that property for you for those 5 days, because at the end of the 5 days, before 5 p.m. on the 5th day, you can say, no, I'm not going to proceed, and you will lose your 0.25% deposit, but no other costs. So it's not like losing a 5% deposit or a 10% deposit, which obviously is a lot more money. So, but you know that during that cooling off period, the vendor can't sell the property to anyone else. So effectively they've sold it, you've bought it, but it's conditional on you saying you're going to be continuing at the end of the cooling off period.
Yeah, I like that point. And what people tend to do also, guys, within the cooling off period is they'd conduct a pest and building inspection. Yeah. And I guess what you do that for is just to make sure that all the things that aren't visible to the naked eye, a licensed pest and building inspector would go in and just inspect the property to make sure that there aren't any mold issues, any shower leaks, any any structural issues as well, issues with termites. So a whole bunch of issues that aren't readily visible to, the layman or people that aren't experts in construction or property, for example. You'd get a nice comprehensive report just detailing the current condition of your property. So typical conditions would be poor, good, and high quality. So that would be something that's fairly new. And if you're buying established, then you'd be looking for something that's at least good quality as an overall condition. And and what you can do with that report is further negotiate purchase price. So that's what we do here for clients at Window Property Group. And it just gives you a second window to just make sure that you're paying fair market value for such a property. And a way to negotiate price is, let's say, for example, if there's a faulty shower and there's got multiple leaks, what you can organize within the 5-day cooling off period is to get a tradesman in there, a contractor, get a quote on what it's going to cost to repair the shower leak. And it's really up to the vendor and if they want to sell that property or not. Because if they do want to sell a couple grand to repair a shower leak, isn't going to be a major issue. So they're more than likely to reduce the purchase price of that contract. And also, if there's any termite issues, that's something you want to stay away from, because it's gonna jeopardize the holistic structure of your property you're purchasing. So you're gonna have issues that might creep up, not now in the short term, but maybe 5-10 years. So Robin, what have been your experiences with cooling off periods and pest and building inspections falling short? What have you seen?
I think just the one point I'd like to make, I think it's important to understand, like when you enter into a contract and you sign it, it's basically you're signing up to everything that's on the paper on that contract. Yeah. So if you then let's say you agree a purchase price, you get the building and pest and cooling off, and there's substantial issues. You can't. I mean, I don't know what your experience is, owners, but I think typically, like it's you can't really amend the purchase price on the contract, but you could get, say, a rebate on settlement. So you're in that position. You've either got to make a call of exiting the contract and saying it's just not worth that amount of money. So if the repairs are tens of thousands of dollars, you're better off just walking away and saying, and maybe entering into a new contract for a different purchase price, or getting that rebate on settlement. But what we find is a lot of, it is very important. And as I said, it comes back to this buyer beware issue. So I think it's really good because it gives you, it's a very comprehensive report that really gives you really as best transparency as you're going to get for understanding the nature of the property that you're buying. So in a house, obviously you've got a lot more things that can go wrong. And with the house, you're fully responsible for everything, like the structure, the land, the termites, the roof, the plumbing, the electricity. Everything on the land is the homeowner's responsibility, and so it means you're going to have to pay for 100% of it. If you buy an apartment, it's a little bit different because it's strata, so they have something called the owner's corporation. The owner's corporation actually owns the building, so anything structural and just like basically mostly the building and pest sort of issues. And with apartments, you're probably not going to have termites because they're concrete. But anything else is owned by the owners corporation, so it's their responsibility to maintain. So if you're not going to be paying 100% of any like structural issues there. So yes, but for a house, it's really important to have that understanding. As I said, yeah. So, and in cooling off, yeah, it's up to you then to negotiate with the vendor and just determine like what you're happy with, what you're not happy with. What I do find sometimes with apartments and where people can go wrong, and really is a pitfall, is understanding, and there's a common clause in contracts. So it's called the repair and condition clause. So what that says is basically the purchaser's inspected the property and you've accepted it exactly as it is. Now, look, when people go and inspect properties, like they're there for 10, 15 minutes, even if they're the successful purchaser, they might have had probably only 2 or 3 inspections. And yeah, it's a quick whiz around. And quite often, I've even had people go, I didn't remember like the cupboard being there or, the stairs in that location or a wall being there. So as you can imagine, then understanding like mold, leaks, do all the power points work, do the light fittings work, does the oven work, does the hot water work? A whole myriad of things can become really important that is just not, most purchasers would not pick up on those things. So I think always a really good investment to spend, a couple of $100 getting those reports.
Yeah, 100%. And I'm glad that you brought up apartments, and I just want to highlight, we probably won't have enough time to go into depth, but those that are looking to purchase an apartment, they need to be aware that there's a thing called strata, and in terms of strata, there's a sink fund and an admin fund. So, Robin, I'll get you to touch on those points and what should people kind of be looking out for? How much money should be in these so-called funds? If there should be money, and what's the typical allocation, and what are these funds for?
Yeah, well, I think the thing that we see or we hear most commonly, especially from first home buyers, when buying a strata scheme. So strata scheme could be an apartment, a unit, or a townhouse, villa townhouse. So those are typically all strata developed properties. So typical pitfall that we see people make is go, oh great, this property has really low strata levies, so it's not going to cost me much money. But the trouble with that is that, yeah, as you said, there's sort of 2 funds. The administration, which is your day-to-day expenses, which means that everything from in the 12 months that they budget for is going to be spent. And that typically like is utilities, water rates, electricity. Insurance is often the biggest, building insurance is often the biggest part of that levy. Strata manager fees, general repair and maintenance. So like if the buzzer breaks or, the door gets stuck, they call a handyman out, that all comes out of the admin levy. So it's like the day-to-day. And within that 12 months, whatever they budget for, they say by the end of it, it'll be 0. Then you've got your sinking fund or capital fund, and that fund is to manage the long-term well-being of the building. I mean, I call it well-being, but it's like the repair, restoration, and like long-term refurbishment, so it stays in the same condition or in the condition that it should be. So the trouble with low levies that are too low, it's indicative of a strata scheme or an owner, a collective of owners that don't want to invest in that maintenance of the building. So if you have fees that are too low, it could potentially mean that down the track, you're either going to be hit with special levies, which is an exceptional levy, or they're going to have to substantially raise the levy to do this work. So typically, like I think around $1,500 a quarter for Sydney, like a more sort of modern style, like anything from like the 80s onwards type of apartment in a bigger complex would be common, because you've got lifts, you might have a swimming pool, and so the more facilities that you have, especially now we're seeing like resort type facilities. All those facilities come with a cost. Like lifts are expensive, pools are expensive, gyms are expensive to maintain. So they're always going to have higher levies. If by comparison you go to like a red brick 1930s block of 6 in like inner west or somewhere like that, or the western suburbs, there's no lift, there's no pool, there's no facilities. It's a brick building. The levies are generally going to be lower. So, but you just have to be aware, like, so you have to look for the building type as well, what's appropriate. But so that's levies. Funds can obviously depend on the size of the complex, but you want to have like I guess for the size of the size of the development, the number of units, a pretty healthy balance. Like you want to check the arrears. So like, are the arrears reasonable? I mean, there'll always be probably some arrears, but if arrears are too high, again, it's evidence of owners that are not keeping up with their payments. And all that means is that other owners, they have to put levies up to cover the amount of like arrears that are not being paid for the cash flow.
For sure.
What else? And generally things like the things to look out for with strata and levies and strata reports are, quite often we're seeing cladding issues. So that's the fire risk from fire combustible cladding that was put on, maybe like anything from, 8 years or earlier ago. There can be fire orders. So fire regulations are changing all the time and upgrading. So there could be fire upgrade orders. Waterproofing is a big issue with a lot of more modern apartments, and balconies can be a big thing to look out for. And just other maybe, other potential it's called major capital work or special levies. So that's all things that we would, as conveyancers, we look out for in the report for the purchaser.
For sure. And guys, if sorry, Robin, if anyone's got any questions, please leave them in the comment section below, and we will endeavor to answer them. We are approaching the 30-minute mark, so I guess, Robin, in your experience, after it's all said and done, what happens on settlement day? What's this day whereby you become an official owner? What's going on there?
Yeah, well, in New South Wales, the whole process is electronic. So that means like I log on to a Chrome window, I log into a system. We organise everything with the banks, the vendor, solicitor, etc. And basically, it sort of happens at a click of a button, and sort of 30 minutes, it all processes online, and then spits out and says, thanks for your money, and it's all done. So you don't need to attend an office anymore. The only thing you need to do is just arrange with the real estate agent or your buyer's agent to go and meet them to pick up the keys. So, I think it's great. I love the electronic process. It's really fast and efficient for everyone. Queensland's a little bit different. They're still like one toe in the water, one toe out. So, but they are moving towards full electronic conveyancing, I think, next year. So, Ernest, one question for you is, what do you think is your biggest pitfall that you see when people are looking to buy property?
Yeah, great question, Robin. I guess one is purchasing without pre-approval. That's massive because if you're not pre-approved, you don't know what types of properties to look out for. So pre-approval is important. So that means that how much money will the bank give you to purchase property. So once you've got a better understanding on your pre-approval, your borrowing capacity, then that's when you can go shopping, and then you can kind of filter through suburbs that are one, if you're looking to live within these areas and suburbs, you can kind of pick your top 5 and then look for property within your top 5 suburbs, and then find something that really appeals to you. Or if you're an investor and if you've got $500,000 to spend, then you can filter through markets that are around that $500,000 purchase price, and then look to acquire an asset in that fashion. So reason why it's important to be pre-approved, because if you go and make offers on a property that's $1 million and you can only get access to 700,000, that's a massive waste of time. So pre-approval is important. That's one of the major ones that I do see, Robin.
Yeah.
All right, so we're at the 30-minute mark, Robin. I don't think we have any questions, but thanks, guys, for tuning in. It's been a pleasure. Robin, thank you for jumping on out of your busy schedule. Thank you for joining us today, and we look forward to doing this again. And thanks, guys. And Robin, if you wanted to say anything before we sign off.
Just to say thanks for having me and allowing me to talk so much. I would also say, obviously, a reminder to anyone that does watch this, if you do have any questions, just connect with us on LinkedIn, send us and ask any questions you'd like. Please, connect with me, connect with the owners, ask any questions, and I'd be happy to help with those.
Yeah, awesome. All right, guys, thanks again. Cheers, Robin.
Thanks, Bye.
Bye.